Hello there, welcome back to my channel. In this video, we're still looking on module 2, whereby we are making a continuation on elements of stock procedures. So the stock procedures start with a purchasing of the stock, and when the stock has been purchased, the stock is received on receipts, and then after that we move on to then obviously the stock has to be kept. Then after that it has to be warehousing, and then there is the procedure of issuing, whereby if it's a producing company, the stock is issued to the production at the end of the financial period. That's when we have valuation of stock or valuation of inventory. In this video, I'm going to start on receipts, whereby we have got receipt and stock keeping. Material must be checked against the packing slip or invoice accompanying the delivery, as well as against the original order. So basically, when we are receiving, we also have to check on the order. Remember, for us to purchase the goods, I would have ordered the goods first. So we have to check the order against the goods that are being received, if we are receiving the exact goods that we ordered. So that's what we have. So a goods received voucher is computer and stock list. So obviously we have to post whatever we have received in the system of the company, depending on the system that is being used in that company. So this is what we have, and then we'll see that now. After we have received, obviously there is involvement in terms of calculation of average stock, whereby average stock we are saying average plus stock at the end of the period are divided by 2. So on calculating average stock by saying opening stock be our opening stock plus our closing stock. And then we divide by 2, then you get your average stock. So we have got an alternative formula that we can use of calculating our order size or economic order quantity. Economic order quantity, and then we divide 50 stock. So basically, this is an alternative formula that you can use to calculate your average stock. So moving on, you'd see that from average stock, we are given an example of calculating average stock, whereby say calculate the average stock for item Z1, 2, 3. The opening stock at the beginning of the accounting period was 400 units, and the closing at the end of the accounting period was 500 units. So obviously, on the calculation, we're going to say our opening plus closing, then we divide by 2. So whereby we are going to say it is equal to closing 500. So 400 plus 500, and then we divide by 2. Divide, so we're going to say if you add the 2, you divide by 2. So the answer that we're going to get becomes the average stock. So we are saying average stock is supposed to have 450 units according to information given. So we also have the issue of safety stock or emergency stock, whereby we are saying this is inventory cushion against greater than normal demand or problems with the ordering or delivery of material. If the safety stock is greater than what is needed, the carrying cost will be unnecessarily high. So obviously, safety stock, we are saying we keep some stock for the reasons of maybe some emergencies that might come up. Maybe there is a scenario whereby there is higher demand than normal, higher demand of our goods than normal. Obviously, we should have a reserve of those goods so that we can be able to supply. So that reserve is explained as safety stock. So it comes as a cushion against instances of, for example, higher demand than normal. So safety stock, again, we can try to explain this as we describe it as a level of extra stock that is maintained to mitigate risk of stock out caused by uncertainties in supply and demand. So at the end of the day, you would see that it is important to have adequate safety stock levels, which permits business operations to proceed according to their plans. So basically, that is our safety stock. So moving on, we also have maximum maximum stock, whereby maximum stock, we are saying this is the largest amount of a particular stock item or raw material that has to be carried by the business. It is calculated to determine the size of the storing facilities needed. So basically, the maximum stock obviously is going to describe the capability that we have to hold stock, the maximum capability that we have to hold stock. We cannot hold stock that is more than what we are capable of holding. So basically, that's what we have. So on that calculation again, we are going to have also a formula that we are going to have, which is going to lead us to the calculation of the maximum stock. So we are saying on the calculation of maximum stock, it is equal to order point plus usage times minimum order point order period. So that is the formula that we have for calculating maximum stock. So moving on, we also have storage or warehousing, whereby we are saying this is the process that we have of keeping the stock at the business. So obviously, the stock has to be kept in the warehouse. So we have storage or warehousing. So there are factors to be taken into consideration when setting up a warehouse, which also includes whether centralized warehouse or smaller warehouse should be used. So we are also supposed to differentiate between centralized warehousing and smaller warehousing. So basically, the smaller warehouse obviously is the decentralized warehousing. So basically, when we are talking about the centralized warehousing, it focuses on a single location. It offers, you see that it has advantages that we have a single location that we are keeping our goods, where we are warehousing our goods. The advantage is that it offers more control and simplicity, but obviously the disadvantage that is also associated that it may struggle with longer delivery times. So this is centralized. So decentralized, now we have got different locations that we are keeping our stock. So that is the difference that we have. And we go to issue of stock, whereby we are saying proper control over issuing of material and stock is of utmost importance. There's need to send the requisition from the factory to the warehouse, requesting raw materials to be issued for use in the production process. So this is an issue of our stock. So obviously, we are saying after we have kept our stock in the warehouse or wherever we are keeping the stock, we have to issue the stock. If it's a producing company, it has to be issued to the production processes. If we are selling, it is obviously supposed to be issued to the outlets where the stock is being sold. So that is the process of issuing of stock. So finally, at the end of the period, we would want to know the value of the stock that we have in the business. That is now the stock valuation. So for stock valuation, I'm going to say that we've got two main methods that we're going to be looking at within the context of our cost and management accounting N5. That is the calculation of stock value using the FIFO method, which is the first in, first out method, and also we have the weighted average method. So different methods can be used for the valuation of stock on hand. The following are the different methods of stock valuations that we have. We have got the FIFO method and also the weighted average method. So on the FIFO methods, you would see that it assumes that items acquired first will be issued first. So if you are saying those that were acquired or bought first are the ones that are supposed to be issued first, it means we are going to remain with the most recent stock in the business. So on stock valuation, the value of stock is going to represent the current prices as we are having the current stock that we are having in the business. So basically, the oldest inventory gets issued out before newer stock. That is the FIFO method. So so you would see that we also have the weighted average method. So if you move on, you'd see that we have the explanation that we have on weighted average method. We're saying after every increase in the purchase of stock, new average price is calculated and stock is issued and the balance of valued in the average price. So whenever we receive a stock, that's when we are going to calculate the new average. So that new average per unit is now going to be used to value the stock that is currently in stock. So basically that's on weighted average method. So you would see that now on weighted average it's a continuous process whereby the weighted average per unit is going to be calculated throughout the financial period. So basically that's what we have on a weighted average method. So we've got an activity that we have there, which we need to calculate, whereby we are given the following data is supplied by the store manager about item sets 15. Estimated usage per annum, we're given it as 120,000. We've got maximum usage per month, 4,000 units. So we go down, you see that we've got further information given that you just need to browse through. And then we are given the required part whereby you're supposed to calculate at the order point, the economic order quantity, the maximum stock level, and then the average stock, the average stock. So basically, that's what we have on that part. And we are going to start by calculating the order points. So you would need to put down the formula first for the order points. So you're saying one, we are calculating the order point, and the formula is equal to maximum order period times maximum maximum usage. So you're saying a maximum order period whereby we are, if you refer back now to the information given, you'll see that on order periods we can just refer where we have our expected delivery period, which is going to be maximum 4 months, minimum 2 months. So the maximum that we have is 4. So we are going to use our 4 as maximum. So we can simply just substitute our 4. We see that at our 12,000. So we can just try to see as we are doing given maximum usage per month. So we have got estimated usage per annum, which is 120,000 units. Then the maximum usage per month now becomes 4,000. So we have got 4,000. So we are saying the answer that we get 8,000. So on to the next part whereby we are now calculating the economic order quantity. So the first step is to put down the formula, economic order quantity. The quantity is going to be root of whereby we have got a fraction inside the root, whereby the numerator is going to be 2 times annual consumption times order cost, and then the denominator will be holding cost of 1 unit per annum. So we are saying on our numerator we have got 2 times annual consumption and then multiplied by order cost. So this becomes our numerator. Then for denominator, we are saying it's holding cost of 1 unit per year. Per annum, meaning the same thing. So now we are supposed to find the root of the answer that we get there. So we are going to say root. Root, the answer that we get, then we make it a root. So basically that's what we have. So we move on to now 2 terms. The annual consumption with fair per annum is 120,000. So it's 120,000. And then for the odd figure we have for order cost per order, we're given it as 40 rand. So you multiply by 40. And it becomes a numerator. Then for the denominator, we are saying what it cost of 1 unit per year. So we think it's 120. So that is going to be your denominator. Then obviously we find the root. So if we calculate there, you'd see that you are going to get it as, you say 2 times 120,000 times 40, you get 9,600,000, and then you divide by 120. And obviously you're going to see that the answer that you're going to get is 8 million. Which you are also going to find the root. And it becomes to get the root is 8,000. You're going to get your root as 2,828. So if you round it off to the nearest whole number, it becomes 2,828, or to the nearest rand, meaning the same thing. So basically, this is your economic order quantity, and we know that we are supposed to express it in units. If you are given kgs, you're supposed to put your kgs there. So moving on to the next one, which is now the maximum stock level. So on maximum stock level, we are going to calculate it as order points plus economic order quantity. Then we minus in brackets usage, minimum usage times minimum order period. So the maximum stock level, again, you come here. You say order point. And then you subtract in brackets. You're going to say minimum usage. Minimum usage, and then you multiply by minimum order period. So basically, this is what we have on that formula. So we start with the order point, where we did calculate the order points. If you can refer back, we did calculate the order point, and what we got was order point is 48,000. So we are going to use our 48,000. And then we add the economic order quantity, which we also calculated, and we got our economic order quantity is 2,828. And then we subtract in brackets, it's now minimum usage. And then we refer to the question for minimum usage, whereby we are given it as minimum usage per month is 9,000. So we are coming here, we say 9,000. And then we multiply by minimum order period, of which minimum order period is we are given it as two months here. So we've got 2 months. Obviously, we are going to use our 2. So we multiply by 2. So this is what we have, and then we obviously calculate it further, whereby it's going to be, your answer is going to be 32,828. And obviously, it's going to be your units. So basically, this is what we have on that part. We obviously have the last part, which is going to be the average stock. We have the average stock. But remember, we gave 2 formulas for calculating average stock, whereby we said opening stock plus closing stock are divided by 2. Or we have got an alternative formula that says order size or economic order quantity are divided by 2, then we add your separate stock. So according to information that we have, we do not have opening and closing stock. So we can use the second formula, whereby we are saying it is equal to your economic order quantity. So economic order quantity, we can just take note size. And then the answer that you get, you are supposed to add your safety stock. We have already calculated the economic order quantity. We got it as 2,828. Then we divide the question as 6,000 units. You divide there, the answer that you get, you add your 6,000, 14 units. So we can as well try to. So we are saying our final answer. So this is what we guys according to this video, and thank you for listening. Please, let's not forget to subscribe and share to our channel. Don't forget to share the link to our colleagues who are doing cost and management accounting and 5. Let's meet again in the next video. Yes, for this video, I'm out.